All right. Welcome, everybody, to Careers in Finance, brought to you by Valuation Masterclass Bootcamp. You get $100 extra off if you use these codes, live and student live if you're a student. Just go to valuationmasterclass.com/bootcamp or scan the QR code. The next bootcamp starts on September 4th. Can't wait. We've got students from 7 different countries, and I hope that we see you in the boot camp. So I'm going to talk for just a minute before we get started. Tonight, I'm really excited about our guest because I would say that his direction is that he took in the field of finance is different from mine. I was a sell-side analyst, and I was in kind of the more public markets and stuff, and he's got a little bit more history working with government entities, as well as his latest work, which you're going to learn more about. So I'm really excited to welcome, and let's bring him on right now. Let's go. So welcome to Kun Supakorn Laohapitakvorn. Welcome to Careers in Finance.
Thank you, Andrew.
So I appreciate you coming on and taking some time out of your day to share a little bit about your journey. But before we talk about your journey, let's just talk about what are you doing right now. Explain what your job is and all that, so that people around the world can understand that.
Thank you for inviting me here. And currently, I'm working as a fund manager at the Faculty of Medicine Siriraj Hospital under Mahidol University. I manage the I would say endowment fund, or it's kind of like excess reserve for the Siriraj Hospital. And my job is to invest the excess reserve in different kinds of asset class. We have like strategic asset allocation, and then I overweight or underweight each asset class depending on my outlook for each asset class. But usually we take a long-term view when we invest in asset class. Like we can directly invest in securities, like for example in bonds, fixed income in Thailand, and we can use like segregated mandate, hire external fund manager, or use mutual fund as an investment vehicle, and also including like ETF for the foreign investment. We invest in both equity and fixed income in domestically and globally. Yep.
That's interesting. And one of the first question I have is like, do you use some sort of benchmark, or do you have some kind of guidelines? Like, what is the overlaying structure, in your work?
Okay, in each asset class, we have like strategic asset allocation. So we specify the allocation like 10%, 20% in each asset class. And then in each asset class, we have the benchmark. For example, for Thai equity, we may have like SET 100 index as a benchmark. And for global equity, maybe we have like all country world index, something like that as a benchmark. So in each asset class, we have benchmark, and we try our best to beat the benchmark by before we get the allocation for each asset class. We do some kind of formulate the strategic asset allocation. If we invest too much in the fixed income, our return will be very low. If we invest too much for the equity, the return will be like very volatile, but we get a higher return but volatile. Can the board accept? Can the board understand? We need to maybe talk to the board and also present the risk and return and see the board risk appetite and also the time horizon. We need to see the cash flow. Toward the end, we calculate the expected return and expected like risk. In this case, might be like standard deviation or the value at risk in overall portfolio. And we invest according to the plan and overweight or underweight to get the additional return. We call it excess alpha. Yeah.
And just for the listeners and the viewers out there, make sure you type in any questions that you have. Feel free to ask any questions. The first thing I was thinking about when you were talking about that is that one of the bad things about fund management is that you're constantly having to look at a benchmark. And you find that a lot of mutual funds and, funds that are under a lot of pressure are constantly, playing around with the benchmark. And their behavior is driven by the benchmark. Now, in theory, a longer term fund like yours should be able to break away from that a bit, or is it just too hard and it just people don't want to break away from the benchmark, and therefore even though it may hurt you in the long run, you've got to manage relative to a benchmark? How does that happen
I
at
see.
your organization?
I see. Basically, if it's usually if it's a fixed income, for in fixed income we have some kind of in the fixed income, okay, we can hold it to maturity. So what we concern about the yield that we receive. So in this case, for the fixed income, we might concern about the return that we get more than the benchmark. And in addition, like think about it, we don't sell the bond that we buy every day. We just get the yield that we invest. So we tend to look at fixed income in terms of absolute return that we get. Yeah. And but benchmark, we need to anyway, we need to look at the benchmark too, but we focus more on the absolute return in terms of the yield. But for the for example, like for equity, for equity, we use a segregated mandate. We hire the external fund manager. We need to maybe talk to the fund manager in case that we think your how to say it. Yes, I would say that at least we need to compare it to the benchmark. But if we believe that the market is too volatile, or think about it, there's some time when the market get the stock index get higher and higher and higher. If you keep chasing the index, the benchmark, somehow when it go up, is gradually go up. But when it go down quickly, right? So we can communicate to the external fund manager what kinds of return that we want in long term. We want more maybe in some kinds of stable return.
Right.
Yes, I need to compare to the benchmark, but in the time that the stock market too volatile, or we believe that have some kind of too expensive, we say, okay, you look at benchmark just for your just aware of it. Yeah.
Okay. And so you've mentioned something that I think is, if a typical person, or let's say, let's just say a typical person wants to invest in bonds, they're probably going to invest in a bond fund. But you have the ability to own specific bonds. And let's say you get a specific bond that has a 5-year maturity. And let's say that bond is 3.5%. You're pretty much going to get that 3.5% because you're just going to hold it to maturity. And I think the typical person doesn't have that flexibility to say, build their own portfolio of bonds. Is that correct in describing it like that? Or
Yep.
And what's the benefit for you? Is that you have, are you marking those to market, or do you say, no, we're holding them to maturity, so that provides?
We mark to market, but we understand that let's say when the yield go up, we understand that currently the mark to market of the bond, maybe like think about it last year. Trust me, all pension fund in Thailand, trust me, last year mark to market loss 100%. But like I told you, like for the pension fund and the endowment fund, they don't need to sell at that time because they can hold it to maturity, get the yield, get the like yield income. Yeah. And but if in the case that you need to like trading to just I would say we have some trading, but it's not the thing, not the major in the proportion of the fixed income. I
Right.
would say we have some, but not the major. Yep.
And so if we think about that as one kind of unique thing that you have the ability to build a portfolio of bonds, another question I have is, do you have like, are there any asset class opportunities that you get that maybe a typical fund or an individual doesn't get, you know, or is it pretty much the same?
Basically, it depends on the asset universe that approved by the board, approved by the investment committee. I did it successfully in my previous employer.
Yep.
In the past, I worked at the Social Security Office. Before I quit, I proposed that the Social Security Office should invest in private equity and have the private real estate, and eventually, it's successful. Eventually, like got approved. But when I came here, I also proposed that okay, maybe we should invest in private assets such as private equity, private real estate. However, think about it, when you change something, maybe like a bit by a bit, yeah. But I proposed to the board and let them see the pro and con. The point is that make sure that the board understand the risk and return of the investment. Make sure that when the price go up or the price go down, they understand why. Because if they do not understand, possibly high chance that you need to liquidate.
Right.
Seriously.
But you don't want to do that.
Yeah.
And
Yeah.
let's go into we got two questions. Let me just bring up one here from Somkiat, who says, is the absolute return the same idea as income return from coupon payments?
Yeah, for in terms of fixed income, yes.
Yep. Okay. And also Zishan, who's in India, what are the skill sets required to start as a fixed income analyst? Is there any modeling skills required for that, or how does that work?
For the fixed income, I believe that from my experience, usually fixed income, you depends on the macro view. In my opinion, macro view of the economy. Do you think the most important thing when we look at the fixed income, inflation, target inflation, how's the central bank respond to the inflation? Will they increase the interest rate? Will they decrease the investment interest rate policy rate? Will they increase or decrease? What they expect of the inflation? And yes, so you need to understand the economics, and also fixed income is quite quantitative in my opinion. When you do some fixed income investment, high quantitative. Yep. But fixed income also have like corporate bond. If you think about corporate bond, it will feel like you forecast the corporate cash flow and see whether in the worst case scenario during the stress period, can the corporate survive? Yeah. And should they get like some rating upgrade or downgrade? Yeah. So that you can take advantage. It depends on government or corporate bond. Yep.
And how broad is your mandate? Are you investing globally? A certain percentage of your money you're allowed to invest outside of Thailand? And if you have that, what are you able to do with that? You know, how aggressive are you able to be, or is it just one or two markets or one or two, you know, ETFs or something like that?
Okay. First, about the allocation. In each asset class, we have the percentage allocation, and then we have the minimum and maximum for each asset class approved by the board. Okay, so I need to go within the range of each asset class. Then for each asset class, the approved security that I can use for investment. For example, if it's Thai equity, we do not invest it by ourselves. We need to use a segregated mandate. We use an external fund manager to invest for us. For maybe global equity, we can either use an ETF, we can use mutual fund, we can hire external fund manager. It depends. We can propose to the board. And at the current moment, we have three vehicle, and I think it's pretty much the investment vehicle that we use.
And if you look at your own internally, you come up with your own projections of kind of what you think is going to be happening, and then you're getting outside advisors, consultants, and also providers of the different instruments and the like. Can you tell us, like, how do you guys come up with your own opinion about what's happening globally in Asia or in Thailand? And how much are you able to get access to people that can give you, different ideas from what you have?
Okay. First, we can attend the seminar set up by global fund, actually I don't want to name it, but anyway, many global fund well known, they usually have a seminar in Bangkok. We can attend. Also the local asset management company that we can also attend. And usually whenever we buy ETF, the owner of the ETF or the owner of the mutual fund, they usually provide us with the outlook. And then after we listen, and we also have discussion within our team. After we look at the number that maybe get from Bloomberg. Look at the number and see, okay, do you think that number will be what the asset management firm forecast? Do you think the forecast is overestimate or underestimate? Maybe we need to put our view to something like that. And I would say that because the Siriraj investment team is not that big, so we for the foreign investment, we try to outsource some part. We outsource.
Right. And you talked before about kind of the structure, and the board approves a certain range and things like that. Was that something that you were involved in setting, or was that already there when you arrived, and it was a structure that maybe a consultant helped them put together, or how did that work?
Usually it's there, but it have review every year, or it depends. But for us, maybe the review every year. So when I come, I can just propose. Okay, I believe that maybe we should add some investment universe for the securities. We should add some ETF. Even it's annually review, but we can have a a special review. Because I just came in. Okay, a special review. But for the strategic asset allocation is 3-year period. Allocation 3-year period. But even in 3-year period for the allocation, we can like I told you, within our range. If we think that, I think maybe if we believe that we should overweight equity, we can go to the upper range. Okay. But the board is quite, in my opinion, flexible. Just propose and give the reason why, and we can talk.
We got a question from Africa here. In emerging markets like those in Africa, with your experience, what would you advise career beginners as beginner investors to tackle career opportunities around finance roles like yours, as well as investment for beginner investors? I mean, one of the things I can say about my experience in most of the markets in Africa is that there's not a huge public market. So maybe there's opportunities within the government, and then opportunities around. But maybe you can mention, give some thoughts on that, but also just generally how to start a career in finance for a beginner.
Usually for me, I start as a analyst. So maybe you should look for like some role as a beginner, like investment analyst or equity analyst or fixed income analyst. I believe that I think pretty much the same everywhere. But from my view, just you need to get your how to say get the sense. You need to be in the market first, be in the market and see what other people do in the market first. If, like I have some like friends when I work in the Social Security office, maybe like many years ago. My friend, he actually worked as an engineer. He would like to move from engineer to in field of finance. So he started as an equity analyst. Right now, he is a fixed income fund manager. Yeah, I believe that you start just start.
Yeah.
And then in my opinion, you spend more time. Not even at the work hour, but when you go back, self study, read more books about how to do analysis, attend the boot camp with Andrew.
Yeah.
I think that seriously, that's the best way.
Everything you can
Yep.
learn. I have a
Yep.
friend of mine. He came to Thailand. He was a British guy, and he had studied like liberal arts. So he wanted to become an analyst, but he worked as an editor at a broker, and he edited all the research. And for 3 years, he edited and he studied for CFA. And by the time he got done with 3 years, he had his CFA charter, and then he became an analyst, and then he rose up, really fast. So, that's also just to mention for Aquile, this I did have a student, Rashid Lawal in Nigeria, who took the Valuation Masterclass Bootcamp. And, it's an amazing story, Supakorn, about him. It was right during the time when the government wasn't paying the teachers. So there was a strike at the university. So, and his family doesn't have much money. He doesn't have a computer, and all of the assignments on a computer. So he had to go to school when the school was closed and ask his professor to let him use his computer so that he could compete and stay going, in the Valuation Masterclass Bootcamp, which is very tough. And he was at the top of the boards every single week. And he graduated and he got an internship with Bank of America. And now he just sent me a message the other day that he got a full-time job offer from Bank of America that he's, working on from Nigeria. So
you see, result of the self-study. Yeah.
It's just incredible. I have another lady from Nigeria. She worked for a company called Zenith Bank, and the boot camp's really hard, and she was working full time, and she was a little bit older, and she was raising 4 children, and she passed the boot camp. And then she sent me a message a couple months later to say a big 4 consulting firm reached out to her on LinkedIn, and they hired her, and now she lives in Canada.
Nice.
And works for them. So
very nice.
I think the fact is you got to get down there, and if you haven't gotten into the industry, start to build a model portfolio that doesn't require any money. Just do it in Excel. Start picking stocks. Start thinking about that, and that's a good way, to start. Also, Zishan says normally fixed income have multiple categories like private credit, bonds, MBS, municipal bonds. Is there any priority of any category that a fund manager prefers?
For us in Thailand, the market not that complicated like in the US. I would say that basically the largest one is government bond. Second one is corporate bond. I don't think that the more MBS here that what you call that liquid or that usually just to market in Thailand.
And the reason for that is because in the US, they set up Fannie Mae and Freddie Mac many years ago, which bought mortgage loans from banks. So in Thailand, just like in Nigeria and every other country, most of the countries around the world, when a bank issues a loan, a mortgage loan to a home buyer, the bank is going to hold that loan on their
Yep.
balance sheet
Yep.
until that home buyer
That's right.
pays that money back.
Yep.
But in America, basically that bank can sell that mortgage loan to
Yep.
Fannie Mae or Freddie Mac. And then when they want to inject money into the system, the Fed buys the loans from Fannie Mae and Freddie Mac, and then the Fannie Mae and Freddie Mac suck out more loans. And this is why, and mortgage-backed securities are securities that Fannie Mae and Freddie Mac are allowed to invest in, and therefore they're demanding these from the market. And that's why you see them in the US as opposed to Thailand and most other
Yep.
countries don't
Yep.
have a secondary market.
Yep.
Banks are fine with keeping that. And that's the other reason why banks around the world have fixed rate mortgages. The reason why US can do the floating rate mortgages, the reason the US can do fixed rate mortgages is because it's financed ultimately by Fannie Mae or Freddie Mac. They can borrow long-term as a quasi-government entity at a very low rate. And so the dynamics mean that if you're in countries like Thailand, you're not going to get much mortgage-backed security
That's
type
right.
of instruments.
That's right. That's right.
So I'll help with that one. Tell us a little bit about SSO. I remember visiting there many, many years ago when I was a young analyst. But maybe just tell us about how you initially found the job at Social Security Office, and what was it that tell us a little bit about your experience there.
Okay. When I before I came back from the US, I studied in the US. Before I came back, I tried to think of what kind of job should I apply for. Anyway, I found the name Kun Win Prompat. He is a famous guy from the SSO.
Yep.
Yeah, I found his name. Okay, maybe I should talk to him. So I set up a meeting with him, talk to him just a little bit about the work and the career path at the SSO. Then when I came back, so I applied for the job at SSO. First, I work as a government officer here. My title is a risk analyst at the very beginning for the credit analyst, but in quantitative term, not I like overall portfolio and look at the quantitative, how's the credit rating change, affect the value of the portfolio, something like that. Yep. And then I work as a fixed income dealer. This is long time ago. Sometimes I need to remember. Okay. Then I work as a fixed income dealer, buy and sell fixed income for the Social Security Office. However, let's say 95% we bought the fixed income. Yeah, because the largest pension fund in Thailand, by the way, SSO, the largest pension fund in Thailand. We basically bought most of the fixed income. Yeah, and then I work as equity analyst. Yeah, equity analyst, specialized in the real estate for the real estate developer like land and house and Supakorn in Thailand, and also for the REITs, property fund and REITs in Thailand. I do some kinds of cash flow projection, do DCF model, and whenever there's some kinds of acquisition, so I need to say, okay, is it worth or is it too expensive? Should SSO vote yes or no, something like that. Whether it's better to buy more share at a cheaper price or not, something like that. Okay, and then I got promoted to be the head of the investment strategy team that took care of the strategic asset allocation of the Social Security Office. Yeah. Basically, I do like forecast the asset returns and set up the outlook for each asset class, like Thai equity, Thai bond, global equity, global bond, and like alternative. During that time, it's only like real estate for the REIT, real estate investment trust. Yeah, during that time. And yeah, we cooperate with the like advisor, like anyway, global advisor. Yeah, to also like do some kinds of formulate the strategic asset allocation, and as a head of the team, I have a chance to talk to the board and also the investment committee many times. So I get some sense that okay, what should I do in order to propose? Trust me, investment is not only invest. Trust me, you need to talk to the board. You not need to talk to the stakeholder. Yeah, like SSO, like stakeholder, like government, employer, employee. You need to talk to them. How to persuade them to change the allocation for the next 5 years, how to persuade them like, to invest more in the, let's say, private equity, private real estate,
Right.
to have more allocation. Yeah.
And I guess all they care about probably is risk. Like they don't want to get in trouble or do something
Yes.
that's gonna
Yes.
be blamed for.
Yep. At the very beginning, like everyone like risk averse, I would say. Yep. Take at least amount of risk as possible. Yeah. But when you take very small amount of risk, you get a very low return. So you need to tell them, maybe educate, or maybe like show them some fact and figures. Yeah. And maybe hold some seminar meetings, something like that. Make them understand, make them confident. Yep.
And the size of SSO is massive.
Yeah.
Particularly compared to, where you're at now.
Yes, that's right.
Why did you leave, or what was it that motivated you to change jobs?
Basically, like when you work as a government officer, you cannot apply for the position. You need to ask your boss to change the position. Yeah, ask, okay, I would like to work as that position. Can you help me? I'm ready. Trust me. Yeah. So, it's not like working in the like private company when you can apply to the job, right? Working as a government officer, the boss need to see, okay, whether you are good enough to move to another position, or
Right.
what if you are very good at the strategic asset allocation? If you move from this position, who else will be replaced? Who else will take your position? Yeah, something like that. They need to consider every aspect, I would say. Yeah.
And I guess you get more flexibility in your current job, or
maybe more flexibility. And I work there for I work as a head of the team maybe 5 years, and yeah, maybe move. Yeah.
And what would be your maybe you can just talk briefly about your start, like for instance, what was the value for you of CFA? And
Wow, it's
maybe
tremendous.
also
Yeah.
think about, other things about when you started.
For the CFA, I believe that it helped me to understand the world of finance, in my opinion. When we graduate, I graduated from financial engineering. Like but if you want to understand the market, how the market works, you need to take the course, in my opinion, to deeply understand. And it's also help you to understand like what I would say what fund manager, what analysts think. How to explain it? If you know what other people think in the same market, you know how it works. You know how to play in the market. That's my opinion. Okay, because like when we talk about the same thing, we understand the same thing, and we understand how like fixed income work. What kinds of risk associated with the fixed income, something like that. You learn from the CFA, and you can apply it to the real world, to your career. Yeah, especially in my opinion, the modeling class, one of the modeling like discount cash flow model. It's one thing I would like to say about the SSO. it's very very like how to say whenever the fund manager buys something, they need to have like some evidence. Like you need to do some cash flow projection. Make sure that the stock that the fund manager will buy is have a cheap valuation, good valuation at the cheap price. Yeah, I think it's very good practice in my opinion.
Right.
Whenever even it's a good one, but it's too expensive, the fund manager maybe avoid it. I think it's
Right.
good practice. I also learned from my career, from fund manager as at that time as an analyst. Yeah.
And are you allowed to invest your own money, or are there restrictions that you've had as
Ah,
you've worked over the
okay,
years?
okay. Uh, at at okay, at the SSO is quite strict, quite
Mm.
strict. We cannot invest in direct equity. I cannot buy equity like one by one select securities by myself.
Yep.
I need to invest in the mutual fund. Yeah, but it's okay in my opinion. Mutual fund is fine.
Yep.
And also at the Siriraj Hospital, actually there's no like requirement, but for me, I only invest in mutual fund. Yeah, I don't want to have any conflict. Something it's quite it will destroy my career path. So
Exactly.
mutual fund is good for me. Yeah,
And
yeah,
that's what we learn in CFA
yeah,
Code of Ethics.
yeah.
It's not only that you are independent and you're objective, so you're not conflicting, but it's
Yep,
even the appearance of it that
yep,
we're supposed to avoid any appearance that we
yep,
may be having a conflict of interest. So yeah, a lot of young people come into finance. They think I'm going to get rich and I'm going to build a portfolio. But what I try to tell them is that no, you're probably going to be restricted from buying a lot of stuff
yep,
by your bank. And I always say focus on making profit for your client rather than for you, and then you'll be fine. You'll be fine.
yep.
Another question is, do you enjoy your work?
Yes, I enjoy my work a lot.
What do you
Uh,
enjoy about it?
I believe that whenever you do some kinds of analysis, like think about what going on in the market, what going on in the economy, and how you invest, how you get the returns from, how to avoid the risk. I think that somehow I enjoy that. That's kind of thinking. Yeah, enjoy the process of thinking. Uh, think. I don't know what kinds of job that will allow you to maybe analyze the economy like us, like fund manager. Like
Yeah.
you usually like think about it like other career, they have day-to-day job. They need to do some certain thing every day. Yeah, but for us, we look at today. Maybe I look at the market in the China, what going on in China, what about the company for the property sector in China, something like that, and maybe what about what's going on in the US, how's the Fed in the Jackson Hole meeting. I think I love that. I love that sense. Yeah, learn from what's going on in the economy, in the market, and analyze, and then how to invest. Yeah.
Yeah, it's never ending learning.
Yep,
And
that's right.
and but also the part that you're making, the point that you're making is the idea that you have some flexibility to kind of move around and look at
Yeah.
this and then look at that. I know I really enjoy that as an analyst. Like just right now, I write a quarterly global investment,
Yep.
piece that's about 200-page PowerPoint of all
Mm,
of my thinking. I do
mm,
it every quarter. And today I started taking notes about what I'm going to start writing on. And the first thing is I want to look at global bank sectors, the bank sector, and think about what's happening with banks, what are the risks, what's going on. So I have some great global numbers that I've run. I've been looking at interest rates and where I think things are going, inflation, and I have some global charts that I've created over the years that help me look at the whole picture. but it's just so fun to dig into
Yep.
different topics,
Yep. That's right.
and you have the flexibility to do it
Yep.
because you're trying to understand, as much as you can. So
Yeah. Yep. That's
one
right.
of the downsides to research is when you hit a dead end. And what most people don't realize is that that's a large part of research,
Mm.
where you have a hypothesis that something is connected in one way or another, and you spend days collecting data, getting it all together, and then you produce some charts, graphs, data analysis, and then you go, nope, there's no relationship here. And then you
Yep.
realize I just spent 10 hours working on it. But that's part of the process, is
Yep.
figuring
That's
out
right.
what works and what doesn't work.
Enjoy the learning process instead of the outcome.
Yes, exactly. That's we learned from Annie Duke. I have one of her books up here on decision, about understanding the process of your
Yep.
decision making is the
Yep.
key to
Yep.
successful decision making.
That's
She
right.
was a guest on my Worst Investment Ever podcast that I have. It was
Mm.
great having her on when she came out with her latest book. All right, so we're going to wrap up, and before we do, I want you to think about this question, and then I'm gonna share the sponsorship information, and then after that, I'm gonna ask you to answer this question, and that is, what advice would you give young people to build a happy and successful career in finance based upon what you've learned? So take a moment and think about that. And let me remind the audience just for a moment that the Careers in Finance discussion is brought to you by Valuation Masterclass Bootcamp. And you can get $100 extra off by using these coupon codes, LIVE and STUDENT LIVE. If you're a student, you get that lower price. And then the valuationmasterclass.com/bootcamp is where you can get that and apply those codes, as well as just scan the QR code. Next bootcamp happens on September 4th, and I look forward to seeing you there. All right, so let's come back. And what are your thoughts? What's your advice?
I I would say that you need to love to learn. In my opinion, just love to learn. And uh, why did I say that? I mean, trust me. When you work as a fund manager, work in finance, you will have something new. Every single day, you get something new, like news, information, market move, whatever. You need to learn and try to, like I said, try to enjoy the learning process, because it's possible that you make a wrong decision, but if you learn if you learn from the maybe the process, then your process of making decision will get better and better. That's my suggestion.
That's
And yeah, that's it. Yep.
That's great advice. And I think
Yep.
the idea of improving your thinking process, your
Yep.
decision making process, is then what helps you grow in value.
Yep.
You become more valuable when you've developed these skills and
That's
you've
right.
honed them. It doesn't mean
That's
you
right.
go without making mistakes. We all make mistakes,
Yep.
and you can't get it right all the time in the stock market. But this decision making process and thinking process is valuable.
Yep.
Well, I want to thank you for taking the time to come on the show, and I'm gonna close out the show in just a minute, and you and I will talk for a couple minutes. So if you can hang on.
Yep.
But again, I want to thank you for coming on the show. And if you have any parting words, now's a great time to share your parting words of wisdom.
Oh my God.
Yes.
uh, uh, I'm not prepared for this, Andrew.
Oh my God. Well, I think you
Okay.
already gave some good stuff about habit learning mindset,
But yeah, but I don't want to repeat myself, but just have a growing mindset, love to learn, and in my opinion, okay, one more thing, one more thing. This is what I learned from working as a social security office. Okay, whenever your friend from other department or your friend like asks you for help, trust me, help them.
Mm.
Seriously, like many time, like my friend from my colleague from other unit, other group, other department asked me, Klang, can you help me do some kind of analysis for this stuff? Klang, I don't know what to do. Can you help me do? Just guide me to do the analysis. Eventually, like they know that you are very valuable, and you become, because everybody except you understand that you're valuable for the organization. Toward the end, everyone will help you in your career path. That's what I believe. Yeah.
Such great advice.
Yep.
Such great advice. And it's just, I get in the habit of asking people, is there something I can help you with? What challenge are you facing? I have a person that I talked to for many years, and I asked him one day, what challenge are you facing right now? And he says, oh, I just lost my podcast host for my podcast. And I said, I can help you with that. And he said, please. And you realize, like, yeah. So it's great advice. Well, I want to thank you for coming on the show, and you and I will talk for a couple of minutes after this, but
Okay.
I'm going to wrap up and say big thanks. I know we've got a lot of viewers and people that will watch this and hopefully will gain from it. So thank you very much for coming on Careers in Finance.
Thank you. I will say สวัสดีครับ Thank
สวั
you.
สดีครับสวัสดีครับขอบคุณมากครับ
Yeah.
All right. So that was a great discussion with Kun Supakorn, who also ended right at the end with some great advice about helping your colleague. And if you help your colleague, you'll be seen, as he said, as a resource. And that is so valuable for you in your career because, oh, by the way, there's going to come time where you need help too. And so if you've helped others, they're going to be happy to help you. And that wraps up Careers in Finance, brought to you by Valuation Masterclass Bootcamp. Remember, bootcamp starts September 4th, and I hope to see you there